a cartel for oil consumers. From OPEC to OPIC. Oil cartels were originally conceived as defensive instruments, created by or on behalf of suppliers in a time of excess capacity, with the aim of stabilizing crude oil prices. The idea was that by maintaining sufficient spare production capacity, producers could influence market prices and minimize volatility, a boon not only to them but also to oil consumers, even if they preferred that such stability came at a lower cost. Today, though, with producers working pretty much at capacity and analysts talking of $100 a barrel oil, it's consumers who feel they need to band together for mutual defense. The Organization of the Petroleum Exporting Countries, established in 1960, wasn't the first cartel. In the 1930s, the somewhat incongruously named Texas Railroad Commission regulated the state's oil production to keep prices from plummeting. Around the same time, the big international oil companies sought to stabilize prices through the OPEC agreement, in which they agreed to collaborate on the management of crude output. Both the Texas Commission and the OPEC agreement became obsolete in the early 1970s, when U.S. oil production was going full tilt and OPEC states had replaced the oil companies as the primary custodians of the oil spigot. Of course, regulation of crude oil prices through the management of production has its limits. It's easy to forget that during the 1998 Asian crisis, oil prices plummeted to $10 a barrel because of the abrupt drop in demand. More recently, rising demand in Asia, along with growing concerns about oil supply security, have pushed prices above $70 a barrel. And OPEC can do little about it. With crude production at capacity in most OPEC countries, the cartel is unable to rein in prices by increasing output. Indeed, despite the roughly 15% projected growth in worldwide production capacity over the next 5 years, output will only barely keep up with demand. Absent a cataclysmic economic downturn among oil-consuming nations, OPEC, or any other conceivable organization of oil producers will no longer be able to manage the market. Which raises a question: as excess capacity gives way to excess demand, will some institution replace OPEC as a controlling mechanism? The International Energy Agency currently monitors energy markets, coordinates oil stockpiling, and recommends options to consuming countries. Could the next step be a more active institution to manage the collective concerns of oil importers and OPIC, Organization of the Petroleum Importing Countries, instead of an OPEC? The organization's members would be the largest and fastest growing energy users: the United States, the European Union, Japan, China, South Korea, and India. Its aim a response to both oil supply constraints and the negative environmental consequences of fossil fuel use would be the management not of production but of consumption. Such an organization's programs and policies would need to cover 3 time frames. In the long term, say, the next 50 years, during which oil consumption will certainly peak and then drop off as remaining reserves dwindle, the organization would need to promote the development of alternative energy sources, such as biofuels, and technologies to reduce energy use. In the medium term, roughly the next 20 years, the group would need to invest in new production facilities, and work to protect such investments by improving security in oil and natural gas producing areas. In the short term, the next 5 years, the organization, its policy options constrained by existing capital stock and prior investments, would work to foster a closer coordination of members' energy policies. It would also need to encourage an active program of buying and selling crude from expanded stockpiles in order to maintain prices within an agreed band, even as it acknowledged the historical difficulties in trying to stabilize commodity prices through buffer stocks. Could such an organization, an OPIC, actually work? Despite an array of conflicting interests, OPIC's members would share the strong desire to ensure continuity of oil supply at the lowest feasible price. Most of them would also see the benefits of addressing environmental issues and lessening their collective dependence on oil. Undoubtedly, there would be disagreements over whether to rely on market mechanisms or long-term purchase agreements with oil producers in order to achieve the group's goals, differences that would test members' policymaking and diplomacy skills. But the alternative to such an organization, an array of regional groups and large states pursuing their own energy interests in a form of energy mercantilism, wouldn't serve the interests of any of the big oil-consuming nations.
Thank you for your valuable time in this video. Please subscribe to our channel for more.